What a difference a national holiday in the middle of the week makes. On Monday, the inability for tech stocks to maintain that early rally cemented the idea that, well, that there was more to go on the downside. But today, tech late in NASDAQ composite turned lower early on. It followed the Dow lower, but just when it looked like we'd be talking about that whole rotation story, tech found buyers in NASDAQ composite. Actually, it was the best session for any of the major indexes out there. But there was rotation and hot names, but these were hot retail names. Yeah, there have been some hot retail names, including Ulta Beauty. I gave this to you over 2 years ago. Burlington Coat Factory, another old favorite, both under a lot of pressure. In fact, more than usual. And then after the close, you have PriceSmart. That stock's down 7% after posting its quarterly results. And, well, speaking of former hot retailers, True Religion, once the hottest jeans in the nation, I never owned a pair, filed for bankruptcy protection today. Let's face it, being hip is fickle and flighty. Now, the biggest loser today was energy. Crude oil got hit on reports of some OPEC discontent over there, the next move that they're going to make over there. That cheap crude story, though, finally helping out transportation names. Powered largely by airlines, the Dow Jones Transportation Index flew to a new all-time high. And before you assume that, well, maybe it's too late to have exposure there, you need to understand this index is up more than 29% in the past 52 weeks. But for the year, up less than 7%. In other words, after moving sideways all year long, it might be breaking out, and I think you may want to own a little bit of this, so make sure you have some. Also, got a bit of good news from the Gallup Job Creation Index. Came in virtually unchanged, plus 20.36, fractionally off the all-time high established in May. By the way, it's been 16 straight months with the read at 30, plus 30 or greater. That is the ultimate sign of strong employment. We're going to get ADP numbers tomorrow, and then that big jobs report comes out on Friday from the federal government. This is the perfect setup this week. We can see all three major indices close at all-time new highs on Friday. Of course, the data must come in stronger than expected. Joining me now, Eric Schiffer and Glenn Hall to discuss it. Eric, are you as excited about this market as I am?
I continue to be excited. I certainly am excited, Charles. I think I'm seeing it on the business side, on the front end, and I think there's more and more opportunity. We're seeing certainly job, numbers that are really astounding, frankly. My concern is the Fed and what appears to be a lack of willingness to provide the kind of liquidity that can continue to drive the market. But I don't think we're going to see that right away. I do think that the Fed is concerned about making any big move that's going to disrupt market forces. But they're, I think, concerned about the height of the asset prices and, whether that's going to have an impact on the market. Short-term, right. Doubtful. I think that there's still a lot of opportunity. We just got to get these policy things in place. I mean, I'd love to see tax cuts happen. I'd like to see infrastructure happen. I think the market still believes that it will happen, and Trump needs to make it happen, obviously.
Glenn, on that notion with the Fed, Janet Yellen been talking, she's been talking a little bit about asset prices here. That's unnerving. She's done that in the past, and she was all wrong. But when she does it initially, the market gets spooked. The most famous incident of this was the irrational exuberance comment by Alan Greenspan, and the market was irrationally exuberant for the next 3 years. So I like what Eric is saying with respect to how much damage the Fed might be able to do to this rally short term, but long term, are fundamentals in control yet?
Well, it's interesting. If you looked at the Fed minutes today, which I'm sure you did, they did speak about that and whether the financials are stable or not, whether the markets are stable at these levels or not. There was some concern about the prices being a little high, but there was also discussion about, the fundamentals are there to support this. And then the question is, what's the long-term outlook for the economy and for inflation in particular? So there's a sense of the companies are growing.
Why are they so unconcerned, though, about deflationary numbers? Why do they think it's just, a little bit something here, something there, like cheap cell phone prices or cheap cable bills? I mean, that seems nonsensical to me, but they actually put that out there.
Well, there are some members of the Fed right now who are concerned about this. They're not convinced that this sort of slowdown that we've seen in the inflationary pressure is not a temporary thing. They think it could be a longer-term thing, and it makes them hesitant to start unwinding that portfolio. That's a lot of the discussion in the minutes.
All right, gentlemen, thank you both very, very much. Next.